Okay, everybody, here we go. It's me and oh boy, do we have a lot to talk about. So just sit back and relax. I'm smiling, although I shouldn't be, but something is about to happen. It's going to happen, and I want you to be among the first to know about it. That's going to be big here. Well, let's start off with this. Today, market was just lovely, of course. Falling across the board, the NASDAQ getting hit the hardest. Why? Well, as we all know, the tech sector is the most interest rate sensitive. Bonds are selling off around the world. The U.S. 10-year yield, 4.02, so above 4%. Okay, clearly there is something going on here. And, you know, sometimes things just kind of hit you. So what do we know? Before we go over the market in any more detail, I want to tell you something that's getting set up here. If you recall, let's talk about our lovely, whatever it is, Janet Yellen thing. Okay, let's talk about her. So whatever, over the past several weeks, as you all know, we've been talking about it, has been talking about how the financial system is sound. There's no problems here. She just doesn't see it. She also didn't see inflation surging out of control. Remember, this is going to be temporary, transitory. Don't worry about it. Obviously, look, she's not that stupid. You and I knew from day one, when they started talking about inflation being transitory and temporary, that it was just a lie. Not only that, it was a setup to create even more inflation as we are seeing now. Not going to stop. But keep this in mind. Over the past several weeks, Janet Yellen stain, as in a dark, dirty, disgusting, putrid, stinking stain, like a human stain, along with Yellow Stain and Franken-Mummy Man. They're all in the same party here. Pelosi, all of them. Anyway, let's just move forward here. So the setup is very simple. She at first was telling us one story, Yellen. Yesterday, completely switches her tune. Okay, warning that she's yet to reveal who we are, see problems in the debt market regarding liquidity. Okay, clearly that's been going on for quite a while now. You and I have been talking about this before anybody else. Okay, so you and me, way ahead of the curve. I love it that way. Now, so what's being set up now is Janet Yellen, okay, is now approaching the major Wall Street banks and saying, hey, here's an idea for you. We all understand now, everybody gets it, that there is a liquidity issue here in the debt market. It's just in our face, all right, without going into more detail. Now, she's saying, how about if the Treasury buys federal debt? Oh, wow, bing, bing, bing. Meaning the Treasury is going to start buying bonds. Let me tell you something. This isn't new. All right. This has happened before during financial crises, financial meltdowns, and financial emergencies. Well, so what Janet Yellen here is now saying is there is an emergency here. And the U.S. Treasury is going to start buying federal debt. Well, she's asking the banks. And what do you think the banks are going to say? No, duh. The banks are going to say buy it all. So what you and I are about to witness here is yet another debt expansion cycle. Let me say this. If this happens, and I believe it's highly likely, the market's going to, go orgasmic on it, okay? Here's another avenue to continue to inflate the debt. People, you and I, have known for I don't know how long now that they're going to do things and conjure things up out of whatever that we can't believe or dream about. Now, this is, like I said, this has been done before. But this is kind of interesting to me. Setup is nothing is wrong. Everything is great, according to Yellen. All of a sudden, yesterday, there's an issue. Now, today, she's so shook up about it, U.S. Treasury, I guess that's who she's talking about, we approaching the Wall Street Bank saying, we're going to start buying. You think that's a good idea? Let me explain this to you. The CEOs of these Wall Street super banks, they're going to go out they're going to rent a yacht and have the biggest party on the face of the earth here, if and when that happens, and I think it's going to. So just be ready for it. Yet another leg up in the global debt expansion cycle. But let me tell you this, what you're not going to hear nowhere. Are you ready? Let's just put this together. So, what does this mean if the debt expansion cycle is going to continue and get a lot worse? How does that affect the money supply or the amount of debt that's in existence? Well, obviously it goes up, right? Guess what? It's inflationary. Oh my, yet another mechanism here to push inflation higher. Let me ask you, you've been paying at all any attention at all? Probably not. Hopefully not, but maybe you are. To the mainstream propaganda ministry, not yet one syllable, sound, peep, squirt, whatever it might be, talking about how they could contract the money supply today if Yellowstain Powell, as opposed to Yellenstein, whatever the thing is over there, would tell the banks, hey, you know what? We're going to go from a zero capital reserves to maybe increasing it. Contract the money supply, major banks. Who wouldn't like to do that? You see, look, here's the alternative. Yellowstain could go to the banks and tell them, hey, you know what? We're going to raise your capital requirements up from zero. Or have the U.S. Treasury buy the debt. Which choice do you think they're going to take? Oh, yeah, you got it on the first try. Imagine Greg Mannarino's shock. Imagine your shock. Imagine everyone's shock here. So anyway, this is pretty incredible here in my opinion. Anyway, I want to bring this to your attention. So your friend and mine, Jamie Dimon, CEO of the Wall Street Superbank, J.P. Morgan, he's telling you and me to expect more market surprises. Oh, Jamie, dude, I think we're all ready for it. I think any of us here would be surprised not to see something shocking, earth-moving, or whatever you want to throw at us. You think we're stupid? We're not stupid. Anyway, let's look over the market real quick. So, reversal today. I mean, it was amazing to watch how this market played out. And no surprise. And the setup this morning was not very good. Although stocks were higher earlier, we had a reasonably quick reversal here. Why? 10-year yield above 4%. You got dollar strength here. Let me explain this to you too. Okay, little information here for you here. This issue here with the U.S. dollar, for which you and I have known was going to happen from over a year ago, right here on this lovely blog. I said, watch the dollar. Watch what's going to happen to the dollar relative to other currencies. We're going to see the dollar, keep going higher. Oh, Greg, you're wrong. You're going to be wrong, Greg. Well, guess what? I wasn't wrong. And that phenomenon is going to continue here until the instability. Clearly, we have an emergency, okay? Yellen now approaching the Wall Street banks. They want us to buy the debt. I mean, come on. Oh, my. You see, this is also going to make the Federal Reserve very, very happy because now it takes the burden off them. Oh, but whatever you do, let me just, whatever you do, don't call this quantitative easing, even though the Treasury will buy the debt, which is something if the Fed were doing, it would be called quantitative easing. But if the Treasury does it, it's not quantitative easing. Oh, no, it's some other thing. But we'll talk about that whenever we want to, because you see, they actually think that you are like mentally really out there. Like you can't get it. You don't understand what's going on. Oh, don't call it quantitative easing. Of course it is. Duh. But you knew that already. So NASDAQ got hit the hardest. You know why? As I said, rate sensitive, bonds selling off here. We have a problem. All right. Dollar higher. Gold got hit. Silver got hit pretty good. pretty freaking hard today. Okay, imagine my shock on the stronger dollar, which is not going to stop. Let them play their games. We're going to play our games. Okay. In my opinion, this gives you and me an opportunity here. If you're new to this and you haven't been buying gold and or silver, start stacking this stuff. Silver, my favorite asset of all time. You see that? Yeah. Got it all over my freaking desk. Anyway, it's going to be interesting to see how this plays out with Yellen and the Treasury and the banks and the buying of debt. But don't you dare call it quantitative easing. No, don't do it. All right, people. What else can I say? I enjoy being here with you. This whole thing does drive me crazy. And that's it. We will reconvene right here on Sunday for my markets look ahead. Of course, it's going to be lovely as always. And hope I keep it together here. And so what we're going to do is we're going to bring it in like we do every Friday. And if you've never done this before, I want you to do it, right? Bring it in. Bring it closer. No one's watching, all right? Love each other. Care about each other. Be charitable. People, this guy loves you a lot. I mean that from the heart. Ponder these things. And I want to hear from you. What do you think about what we talked about here? This new thing. Well, this kind of new thing. The Treasury is going to buy the debt. Oh, but don't call it quantitative easing. No, don't do it. Don't do it. Yes, do it. Quantitative easing. Call it quantitative easing because it is. See you Sunday for my markets to look ahead.